Hi, welcome to the Financial Fox. Here with me today is Colin Hutchinson, CEO of Ascent Resources.
Hi, Stefania.
Hi, Colin. So finally you can come out of hiding after receiving the green light to sell untreated gas to INA in Croatia. That is a great achievement for Ascent. Would you maybe would like to walk us through the agreement you have in place with them, as well as maybe outlining the expected price and profit margins?
Sure. I mean, the agreement with INA, we signed this in July of last year, so it's taken us around 18 months to get everything, the infrastructure all in place. We've recompleted the 2 wells, refurbished the processing plant, rehabilitated the pipeline, and then get all these important certifications in place. And it's been that last stage that has dragged on a bit longer than we'd hoped, getting the paperwork through the Croatian government. Now that that's in place, the 12-month agreement with INA kicks off once we start sending them gas, and so we started sending them on Friday. It'll run 12 months from last Friday. We fully expect that the agreement could be renewed for another year or longer if we so wished, and we can renegotiate the pricing and the terms at that point. The structure of the agreement, there's a paragraph in the interim statement which goes through the upper and lower limits. We'll aim to produce somewhere between those limits. At the moment we'll start off at the lower end and we'll move towards the upper end once we get greater confidence about how the reservoirs behave and how the wells are performing. We'd expect, based on sort of normal production between the 2 limits, to get around €300,000 a month in revenue. That'll be reasonably profitable initially. We'll get a decent margin on it, and as we increase our revenues, the profit margin, the profitability will obviously increase because we'll be paying off all our fixed costs, so anything else additionally from this point on will generate pure profit.
So basically at the moment you are selling gas that is produced from PG10 and PG11. But you also said in the last announcement that your intention is to re-enter and recomplete existing wells within the Petišovci gas field. So maybe would you like to give us a little bit background about this existing well, the workover you have planned, and the production potential?
Sure. I mean, we're on the joint venture wells are PG10 and PG11. So there are 9 other deep wells. Petišovci Globoki is what PG stands for, and that's they're all sort of around the they're shallower than 10 and 11, but they're the deeper gas reservoir, and some of those wells have produced reasonably successfully in the past. PG1 and PG5 are probably the best 2. The reason that they haven't produced as well as PG10 and 11 is really the way that the wells were completed at the time. These wells were drilled in the sort of 60s, 70s and 80s. Technology obviously has moved on significantly from then, so it's our belief, and it's the belief of anyone who's looked at it, that we can re-enter those wells, complete them using modern techniques, and they'll be able to flow at a reasonably good rate compared to the same rates that we're getting out of 10 and 11. So we've got a development plan which identifies the wells, ranks them in an order of preference, and we'd look to go into 6 or 7 of these existing wells over the next 4 or 5 year period, and boost our production from the initial sort of around 3 million cubic feet a day to get us up to sort of 10, 20, 30 to grow the field. So we'll start off by re-entering the old wells because it's a lot cheaper. The structure's already in place. We're just going in, recompleting them and getting them up and running. So maybe half the cost of a brand new well, we could have one of the old wells up and running. And once they're all performing, then we can decide where we want to drill infill wells, and there's maybe another 6 of those that you'd want to do before you can get up to the sort of 35 million cubic feet a day rate, which is where we see the field at full production.
So you basically have already some well in the pipeline for Q1 2018? We
are in the process of doing all the planning and the permitting to get into those wells to recomplete them. So we sort of have a list of the 4 wells we'd like to do first. They're unlikely to be, it won't be Q1 18 that they'll be done, but we'll have an update on how we're progressing with getting into some of those existing wells during next year.
Okay, and I understand at the same time you are selling untreated gas to INA in Croatia. You are working towards building a treatment plant in Slovenia to tap into the domestic market. I mean, would you like maybe to tell us what stage you are with the permit, and then also how much will cost to build this plant?
Yes, I mean the permit, we're hoping that we hear back from the administrative court really any time now. The appeal was made in May of this year, so based on previous timelines, I would have expected to be hearing back from the court any time now. We obviously hope that or expect it to be favourable, because we've done everything that the court queried us on last time, so we're hopeful that everything will be approved and we'll get the permit. Once that permit's in place, that allows us to start to build the gas processing plant, which allows us to put gas into the Slovenian grid. Slovenia imports virtually all its gas at the moment, so it very much needs our gas, or we'd like to have our gas to provide it with some energy independence and some security. And so once we get that permit, the cost of the new plant's probably around 10 million euros. That's the plant and the metering station. We already have the agreement to put the metering station in. That funding, previously in the past, anyone who's followed the company for a few years will know we had a loan agreement with BNP Paribas back in 2012. That was a 15 million euro facility, and the intention behind that at the time was to build the processing plant and recomplete two more wells. We've had other discussions since then with EBRD, and the problem with the project has always been we don't have the permit and we didn't have any production history. That's what makes arranging finance tricky. Once we've got production history for a few months or whatever, and we've got all the permits in place, it should be perfectly possible to go back to the debt providers, maybe not the ones we talked to in the past, but other debt providers, to get project finance for the plant.
And also for drilling these new wells that we mentioned before, are you also thinking to do another debt facility?
I think the wells, it could be part of the debt facility the way it was last time. We'll also, if we've been producing through to INA for 6-12 months, we'll have built up our cash balances and we'll be able to fund some of it from our own reserves. So I think the fact that we're virtually debt-free now, that we're profitable, that we're generating cash, that we'll have production history from the two wells, and then once we have all the permits in place, we really have all our ducks in a row to fund the next stage of development in a sensible way.
Yes, let's talk a little bit about numbers. I mean, you just mentioned about the fact you are having the first revenue after 10 years of operating in Slovenia, and 45 million invested in the country, isn't it?
There's been 45 million spent by Ascent and its sort of predecessors in the project to this date. So there's been an awful lot invested, and that number's relevant to Ascent because not only it shows our seriousness to the project, but we get 90% of the revenues back until we've received that 45 million in cost recovery. So it's an important.
So you also just in your recent financial result, we also see a stronger balance sheet with showing the conversion of 12 million convertible loan notes from Henderson, and I mean that's great because now you have just 15,000 left of convertible debt, and that just puts you in a much stronger position. What are the revenues expected for 2018?
So for 2018, if we're going to, our revenues will be around 300,000 euros a month. So 3.5 million, 4 million, that should be the sort of ballpark figure we'd be expecting for 2018. And that makes us profitable, certainly on an EBITDA level, and generating some cash. We've got a lovely clean balance sheet now. I think the interim showed that we'd have a significant reduction in debt, and there's been a further conversion since then, so we're down to the sort of 50,000 euro or 50,000 sterling figure, which is remarkable when you think going back to sort of 18 months ago. We had 12 million in debt on the balance sheet. We didn't have the agreement signed with INA. We'd really no way to monetize the gas asset. The share price was dwindling down to about 0.5 of a penny, I think. So sitting here today, sort of 18 months on, share price is sort of around 2p, north of 2p. We've got no debt on the balance sheet. We've got gas revenue flowing across the border, and we're looking forward to sending our first invoice.
And we should see the share price, also reflecting, all this achievement that the company is making. So I think the previous broker, Northland, they have a share price target of 430p. Now, WH Island, with the full development of the Petišovci gas field, it goes up just close to 6p. I mean, in a tweet you mentioned about, the £1 per share. Is that achievable, and what will be the time frame?
Well, now my tweet about £1 per share, I think I thought I was being funny at the time, but I'm not sure everyone got my sense of humour. I mean, it's very difficult when people send you messages asking where you think the share price is going to be to give them a sensible answer. So I flippantly said it was £1. I'm quite pleased to see WH Ireland's note, which came out, and they have a share price range of, I think the target price today is 3p, just over 3p, and they have an unrisked price going up somewhere closer to 6 or just over 6. So I'm pleased to see that, because that's a very, Brendan has been out to the field recently, he's spoken to management, he's gone through the plans in detail, and he's come out with some fairly sensible figures. So it's nice to think that the range is somewhere between 3 and 6, and I'm hopeful. I mean, my own spreadsheets and my own analysis are some way above that. I'm a bit more optimistic, which I'm bound to be, but I'd like to grow the share price as much as possible. I think there's a lot of room to grow. This is just valuing Petišovci. I think there's also room to grow in Slovenia with other things we could do there. And I think if you look at where we're located in the region, we're on the border with Croatia and Hungary. There's a lot of very attractive opportunities in that region, which I think could give us additional shareholder value.
And a few investors, they comment about the management financial interest and investment, in the company. Do you have anything to say? How much shares do you own in the company?
I mean, I've invested. We didn't invest any money in the primary bid placing that was done recently. But basically because it was so heavily oversubscribed, I would have been taking an allocation from a private investor that wanted some, so that I think we would have been in trouble if we'd participated in that one. In the February placing and in the November placing, management did contribute, and I have what to me is a material interest in the company, both through the shares I have and the share option. So I think my interests are perfectly well aligned with shareholders. All I want is to see the share price move up steadily and reflect the value that we have in the underlying assets and the potential to do more in the future.
Okay, Colin, $1 million question to close with. Do you think that Ascent is going to be taken over by an oil and gas company?
I can't really comment too much on that one, except to say that, I mean, we're a public company, so you can never rule things like that out. We're always there. We have hit a major milestone now. We're generating revenues for the first time. We'll be profitable. We'll be starting a 12-month contract to produce to Eno, and you can see the development plan really beginning to grow from here. And we're virtually debt-free. So things have never been so good for Ascent in terms of a clean balance sheet and good prospects. So I think the future's bright, and I certainly want to be here for the next 12 months to execute on the development plan now.
Okay, Colin, thank you very much for your time. This is all for the Financial Fox. See you next time.